grateful for having made the entire finance ministry's job easier when we went with a proposal, because the tendency would be for the finance ministry to be cautious not to let go revenues. But here we really wanted to use this opportunity to make sure that we respect the Indian taxpayer, and that's where we moved towards giving this 12 lakh as the number till which no one will have to pay any tax. Of course, if you're earning up to 12 lakhs, you don't pay anything. If you earn more than that, there is a simplified, now that is also brought in this finance bill, which is now passed by the Lok Sabha and is for the consideration of the Rajya Sabha. The rates have also been brought down, and the slabs have also been made to smoothly move from one to another without huge jumps. Absolute simplification. And as a result, when you give rates which are going to be lesser than what it was before and gradually improving, gradually increasing in rates, the benefits accrue for everybody. So it's not as if we've given only 2 crore taxpayers, but we've given for every taxpayer some of the other benefit. Of course, it's very favorably skewed towards the lower income groups and the middle class. And that is why, in order that we don't lose revenue, but yet give the relief, we brought in the rebate system, which I'm sure any person dealing with the finances and also the public finance observers will understand. It's a legitimate way of giving that additional succor for those who need it. So that is the personal income tax. I don't want to get into details about what the marginal benefit that we extend for those who just cross 12 and what happens to them. Do they end up paying higher than before and all that? So even for that, enough explanation has been given during the budget speech itself. The second major thing that this finance bill does is to bring in the TDS rates rationalization. In fact, in respect of sale of goods, the requirement for TCS under section 206C 1H is proposed to be completely done away with. These kind of steps, which are either bringing it down or completely removing TDS and TCS, help the tax assessee and also help those who collect the tax and who have to remit it in the government's account. So, and also to reduce the multiplicity of rates and compliance burden, it is proposed to bring down certain TDSs and certain TCS rates. The TCS which has been done away with, I've already said, and increase certain thresholds for the requirement of tax to be deducted at source or collected at source. So both the threshold is being raised and the TDS collection itself is being brought down. So other than that, there are several members. I was hearing when Member Seth spoke about how people who have second house, or the first house which they are occupying and buying a second house and which they keep under their occupation, are also now being proposed to be removed from taxation, or even from the way the taxpayer had to declare saying it is under my occupation and therefore no tax should be put. So those kind of compliance burdens have also been removed. In order that we help providing certainty for international taxation, the scope of the safe harbor rules is also now expanded. So this will reduce litigation, and in order to continue the support that we've been giving for the startups, we've allowed the incorporation before 1/4/2030 also to benefit from all those benefits which have been announced all the while. So that incorporation date deadline, which was coming to an end by 31st of this month, has now been extended till 1st April 2030. So it is important, again, to talk about what the finance bill has done as regards customs duty. I briefly did mention that by bringing down the customs duties or by exempting or removing it completely, we are actually benefiting those small and medium industries who import intermediary goods or raw materials for their products, mainly many of them, in fact, which mainly they use for producing some goods which they in turn export. So anyway, we wouldn't have allowed them to have the tax be exported. But even for those who are not exporting within the country, by bringing down the custom duties, we've actually helped in the manufacturing sector in this country. So we have used this opportunity to rationalize tariff structure and to address the duty inversion. Through this, I feel there will be more domestic value addition in industries. It will promote exports as well and absolutely facilitate trade and provide relief to the common people. So the customs, if I can take a minute over it again, customs rate structure announced in July budget has been further followed up in this budget as well. The 25-26 budget, about which we had discussed earlier, now I'm talking about the finance bill, proposes to remove 7 customs tariff rates for industrial goods. So 2 tranches of rationalization of customs tariff has happened. So far we have carried out, and they have reduced the number of tariff rates from 21 to 8, completely bringing it down, including the zero-rated ones. Many Indian exports will become now more competitive as the cost of imported inputs will completely be reduced. Only one other step which is very important, sir. We have now very clearly stated that only one, either the cess or the surcharge, will be applied per item. So social welfare surcharge to be exempted on 82 tariff lines which are already subject to a cess. So the burden of a cess over which we bring in the burden of the surcharge will no longer happen. So the budget proposes to add 35 additional capital goods for the production of EV battery manufacturing, EV battery, and also 28 additional capital goods which are important for production of mobile phone battery are now being added to the exempted goods list. So they are not going to anymore be taxed. Therefore, we will be enabling the production of EV battery in this country and also more mobile phones and mobile phone batteries in this country. So those capital goods being exempted will actually benefit these 2 sectors.